Welcome to Investing with Mackie. In today's video, we're going to take a look at put-call ratios to see if that can give us any idea on market sentiment and if they could be used potentially as an indicator for our trades when making a decision on opening or closing a position. With that being said, all the charts that I am going to look at and use for this analysis will have links below that you can use and interact with as well. So check out those links if you want to dive into data a little bit further or see if you can find something that maybe I've missed. Feel free to mess around with those. As always, if you like this content, go ahead and hit that like button. And if you enjoy these videos and would like to keep seeing them, feel free to subscribe so you don't miss the next one. Now, as we dive into the data here, just kind of a summary of what we're going to be looking at. I have historical data for both SPY, which is what we're going to initially look at for about the last 2 years. Then we're going to quickly take a look at QQQ at the end and see if there's anything different with that data. I started collecting that a little bit after I did for SPY, so it's not quite the same duration, but we'll still take a look at it and see if we can glean any information. And once again, those charts will be available for you either way if you want to look at one or the other. So let's go ahead and dive in. This first chart we have up here is the open interest for SPY. Now on the top we have our calls and the bottom we have our puts. Open interest is not updated throughout the days, and open interest is essentially it's not updated throughout the day. It's only updated once basically at market open. You can see where the open interest was the previous day. So open interest, just for a quick summary, is the number of outstanding contracts, and typically you can break it down by strike price and expiration as well. Here we're looking at it from a whole point of view and taking all of them into consideration. So as we look at this, we can see on the top our calls and our puts. We can see it looks to be that our puts are much higher open interest than our calls. And that tends to be, I believe, because people use puts to hedge their positions. If you're trading options, trying to make money on theta or leveraging your money, you're not necessarily buying puts in order to hedge your position. Just depends on the option strategy that you're using. Now, let's look at the data. We'll kind of zoom in here. So with the interactive charts, you have the ability to kind of interact with them, zoom in them. What I think is really cool is you can kind of see the open interest go up and down, right, throughout the day or throughout the month. And then you can see when contracts expire, there's a huge drop in that open interest. So on the big expiration dates, you got a drop, and then throughout the next couple of days or weeks, you'll see that kind of climb back up until you have another drop. Now, one thing as we're looking at our open interest here is we can see that it looks like the puts and the calls are pretty in line, right? Expiration hits and then it drops. Expiration hits and it drops, right? Whereas when we look at the volume here in a minute, we'll see that it's a lot more variable and it's maybe not clear and steady, and it's hard to potentially pick up on trends. Once again, it doesn't mean that there is not data we'll be able to glean from it, but just for comparison, we'll take a look at that. So looking at our volume, we can see a lot more up and down, but it does match, right? So basically on exciting days, there's more people trading contracts for both calls and puts, right? So here we go. We have a drop down here, right? So November 26th, huge drop in volume, and then also huge drop in volume. Okay, huge peak here, March 10th, huge peak here, March 10th. So there is some correlation in the trading, right? Busy volume days are going to have busy puts and calls. So there's potentially some data there. However, when we actually look at the ratio between the two, okay, so let's take a look at this chart, we can see that this top one, which is our volume put call ratio, it is very variable. A lot of change, a lot of up and down. However, when we look at our open interest, it looks like it's got some lines, it's got some trends, and we can actually see how that potentially compares to the actual prices. So we can see, oh, we have a peak here, right? So basically a high number of puts compared to calls. And it looks like there is a price that peaks here as well. Now the goal here is to see if this allows us to use put call ratio as a leading indicator, right? Can this peak right here indicate that the price, which is this middle chart, is going to decrease. Or if we have some bottoms, right? So a low put to call ratio, so not as many people are using puts to hedge, or whatever the option or the current market might be, right? Does that necessarily mean that the price will go up? So we can see it looks like there is some correlation here, and there is some information to be gleaned. So the next thing I'll do is I'll project the prices out, right, and see how the price changes into the future. The negatives here are just because when we look at percent change, typically you're looking at percent change from the past. So instead of the past, we're looking at the opposite direction out into the future. Then I went ahead and looked at the correlation. So we can see here we have open interest of our put call ratio. So if we think about how correlation works, if something goes up, does the other thing go up? Something goes down, does the other thing go down? Now a perfect correlation is 1, and we can see that when it compares it to itself, right? Open interest to open interest, it's a 1.0 all the way down. Okay, a negative correlation means one goes up, the other goes down. So we can see in terms of the correlation, it looks like it's negative, right? So whatever this is doing, the price is doing the opposite, right? Or that percent change, okay? At the shorter durations, right, there's not a lot of correlation. And then even really up to 60 days, that's not a really huge correlation, but it's a lot more than at these lower values, okay? When it comes to volume, the volume, very little correlation. We do hit, 0.16 out here at 60 days, which is a big jump from the 45 days. However, it doesn't look like it's trending the further you go out to the same extent that our open interest is. So let's go ahead and plot the data so we can see there is some correlation. Let's dive into the data with the percent changes a little bit further in an actual chart. So this chart can be a little bit of an eyesore. I got a lot of data here. And so we can kind of look at how we can actually interact with these charts. So first thing is we can actually hide different lines we're not interested in. So we know that our highest correlation is associated with the 45 and 60 days. So we can actually go ahead and deviz these shorter durations, but you can go ahead and bring those back up later and see if there's maybe a correlation that you can use for an indicator or something else within the data. Now the top one here is percent change. Then this middle chart is our actual open interest put call ratio, and the bottom one is the price. Now I always like to have the percent changes with the price so I can actually see how that price is actually changing, right? Because if you have a whole bunch of positive days, well, that means that in the future the price is going to be going positive, right? But it's hard to actually picture that for me, so I sometimes like to have that price visible as well. So if we look at this, we can see, oh, here's a peak in our put call ratio. So we can use this zoom functionality right here, which allows me to make a box around what I want to see. Okay, so here's this peak. It looks like around March 31st. There's the peak in the data. And then we can see basically anything below 0 is negative in the future. Now, these lines are for 45 and 60 days. So it looks like the price is kind of holding steady initially. But if we go out 45 to 60 days, where's the price going to be? So I can use this right here, the pan tool, and we can start moving across. So 45 days out from March, well, that's all of April, and about halfway through May for 45 days, and all the way through May for 60 days. So we can see at March 31st, we have a price of 454, and it looks like it's going to be pretty negative. So if we look at the price, we can see that does tend to match. We'll go down. Right, so in the middle of May, we can see, look at that, it's a drop of almost $50. And then continuing on, end of May, right, it's still down, but there is a little bit of a bump where it does start to go back up, right? So because these are future prices, it's a little bit hard to follow, but we can kind of see as these ratios come out how it all falls into line. So definitely a lot of data there to kind of mess around with, experiment, see if you can pick maybe some thresholds. Oh, it looks like if I were to sell calls while the put call ratio is above 2, right? Anytime it's above 2, it looks like the percent change 60 to 45 days out is pretty negative, right? So that gives me an ability to, maybe only sell calls when the put call ratio is above 2 or something like that. So you definitely use this to maybe assist in some decision making, even though there's not high correlation. Definitely something to kind of consider and look at. Now, these are 3 different charts. If you look at some of the interactive charts I provided, I'm also have one where the price and the open interest on the same chart. And this is cool, so if you kind of zoom in, you can see as they go up and down, and you can follow around, maybe pan around a little bit, right? So as our open interest put call, so that's that red line, peaks, right? The price starts to go down. Okay, we don't have to worry about percent change immediately. We can see, look, it looks like there is a good trend there. So if you can find those highs, maybe you can catch them. And then, oh, it looks like it kind of bottoms out, right? Well, what does price do at the bottom? It looks like maybe price starts to trend back up. Okay, so now how do you know where those bottoms and tops are when you can't see into the future? That's the next question. Just like trying to use anything with price, how do you know where the tops and bottoms are? You can kind of find maybe those thresholds and use them to determine what you want to do. Okay. I've also created a chart here that has all that percent data again along with the open interest. So if you kind of want to zoom in and look at some of it, let's say that 45 and 60. So we can see these kind of move opposite each other, whereas up above they move together, right? So it was peaked, the price started to move down. And these are a little bit opposite direction. So this goes up and these go down. And that's kind of that negative correlation that we looked at, right? So this pink line is our open interest. So it peaks here. And then that means that the price is looking to be negative into the future. So a lot of puts compared to calls, potentially a negative price. Grabbing our pan tail or our panning tool and slide across and see how that changes as this starts to come down, right? There's a lot less negative. Now, it looks like it's still negative in here, right, for 45 days out, but it's less negative. So that's why having that price up as well can kind of help you to figure out, is it actually an increase or decrease in price rather than just a negative or less negative change compared to where it previously was. So definitely some interesting data there. You can kind of dive into it. Feel free to open up those charts and mess around, see what information you can find. Now quickly, let's go ahead and we'll open up QQQ to see how that compares to some of the stuff we looked at with SPY. So first off, we've got the open interest, and we can see that looks like it matches the same, right? You've got the cyclical up and downs, right? Expirations, looks like you got big drops, and both the puts and calls tend to line up and match each other. Volume, same kind of craziness, right? Up and downs all over the place. Nothing clean there to look at, but something to consider. Maybe we can dive into that and see if there is more to the volume than meets the eye. But from a holistic view, doesn't look like it, right? Come down here, same thing we saw with SPY. We've got our dates across the bottom. The top one is that volume, right? So very sporadic, nothing clear in the data there, at least that I can tell based on this chart. And then we can look at this bottom one, which is our open interest as opposed to the volume. And we start to see some kind of cleaner lines and see some data. A lot of craziness going on over here. But before that, it looks like there is some correlation, right? So as we looked at with SPY, next thing is that correlation. Well, we're looking to the future. It looks like for open interest into the future for QQQ, there's a lot more correlation, right? So in SPY, we had something around like 0.2, right? Here's 0.38, almost 0.4. So almost double the correlation with QQQ, which is something to consider. Why is that, right? Is it the industry, trends up more than down? Are people hedging QQQ less than they're hedging SPY, right? Why might that be? So then we'll dive into the data and we can see these lines to see how they actually fit in over time, right? So let's maybe just look at that 60-day line. So here we go, our ups and our downs. And so we can see here's a peak here. Okay, there's some negative prices in the future, but then we start to get to some of those positive prices. So these charts, once again, are available in the description below. Feel free to open them up, interact with them. It's a web-based chart. Just click on that link. And then as we move forward, let me know if you have any questions and things that you would like to investigate further with this data. If you would like to investigate the data yourself, go ahead and support me on Patreon. All my Patreon supporters will have access to all the data that I'm using to build these charts, I'll give you some Jupyter Notebooks as well to help you get started to do your own analysis. I'll provide this notebook as well. And then maybe you can kind of develop your own information and share what you find with the community to help us make better decisions. As always, subscribe so you don't miss any of my future videos. In the next video, I'm planning to dive into correlation of percent changes based on options into the future, maybe short-term versus long-term, right? How does that apply if I'm looking at 60 days? Does it have higher correlation if I'm looking at options, say 45 days and greater expiration as opposed to less than 45, right? So maybe there's some better correlation that we can develop within the data as we refine instead of just using the whole view of open interest or maybe even volume as well. So look forward to sharing that analysis with you. And with that, thanks for watching.